Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 267 on 26th of July. And we'll talk about who should not be in the market, what kind of traits you need to have to sustain the rigors of the market. We'll talk about that in a bit. But first, the market were reasonably, there was a dip in the morning, but not as much in terms of the first half of the day. But then second half, market just kept falling, and IT stocks again and some of other stocks also cracked hard, down 1.4%. Autos also were soft, minus 1%. Pharma, consumption stocks, real estate. So it seems like there was a entire sort of stress on the entire market, given that we are in a very data heavy week where a lot of results are coming. The Fed is going to raise rates, and what commentary comes out of that post that is also important. GDP growth, US is coming out. So a lot of data this week, and a significant amount of the segment in the market believes that the bounce is over and that we may be headed lower. Just like we've done that 3 times since the last 1 year. We've bounced but gone down below, bounced, gone down to a new low. So some give up of ground that we had gained, but not too much has been lost, at least as of yet. In terms of broader indices, Nifty, while it was down 0.88%, Nifty Next 50 was down minus 1.2%. Mid and small cap index also down nearly 1% after holding out yesterday. And CNX 500 and CNX 200 were also down about 1%. Most strategies, however, did outperform today. MIATH2 was up in the green. ATH was down only 0.12%. EverGreen was down 0.35%. Nifty Next 50, our most popular strategy now, minus 0.36%. MIMT All Cap minus 0.4%. And MI25, after yesterday's spectacular run, gave up nearly 0.9%. And you can see the heat map of the day. While Reliance stood the ground after a beating yesterday, rest of a lot of other stocks were down badly. Infosys leading minus 3.5%, Levers down 3%, TCS minus 1.5%, HCL Tech 2%, Wipro down 2%. In banking, Kotak Bank was down minus 2%. Bajaj Finserv was exceptionally up on news of split of the stock, plus 5.5%. Steel still better, GSW plus 2%, although Tata Steel minus 1%. And some consumption stocks, Titan and auto stocks, Maruti, Tata Motors, Bajaj Auto, all of these were down. FMCG besides ITC were quite badly hit. Britannia, Nestle, both down 1 to 2%. This symbol looks incorrect, but that may be Tata Consumer here. Okay. Top gainers: East India Hotel plus 7%, Dilip Buildcon, Karur Vaisya up 6%, Bajaj Finserv already mentioned, Sun TV up 5%. And the biggest drop came in TANLA platform. This stock has gone from something 50 or 80 rupees to 2000, and now it is back at 700 odd. I remember we got in somewhere around 85 rupees in one of the strategies, MI50 I think, and then got out at 800. So almost a 9-bagger we had there. Of course we could not ride it all the way to 2000 because it had steep falls in the middle, but nevertheless a very good 9-bagger there. And see, the stock is coming back, so unless you had a strategy to get out, you would have seen 2000 and you would have seen 730 now, so that would have been very painful. Just like in Zomato also, stock going to crazy numbers, 1.3 lakh crore market cap, and now it is at 0.3 lakh crore market cap. So stock has gone 75% down from where it peaked. There was no question of any good value there, and even now people are questioning the value. So value is very, very vague concept where it's difficult to ascertain it at any point. Right now also, even at 40 rupees, there's no beeline to buy this, that it has come below value or something like that. I mean, that's not happening yet. So it has to find value somewhere. Paytm also cracked 8%, probably in sympathy with other new age stocks. Persistent down 7.5%, Sonata down 7.5%. So this mid cap IT is now cracking very hard after the round of large cap IT cracking. So what is our sort of inference from watching thousands of clients over a number of years? In fact, I've been seeing retail clients since 25 years now, more than that, 27 years. What I find most common in most investors is lack of patience, zero strategy, and extremely sort of undecided way of how they want to approach the market. So in one season they are doing something else, and in another season they may be doing something else. So hence, not having any structure, format or framework for investing. Unless you have that, the market will pull you in greed when it goes up, and it will pull you with fear when it goes down, and that cycle will keep continuing. You will not realize 20 years will go by and you would not have made much money from the market. So definitely try to have a strategy in place, whichever one you like, momentum or no momentum, whatever may be your style that suits your psychology. Assess whether you are a patient person. Can you hold on for stocks not doing anything for 7 years, 10 years, or are you more happier to see them do something in a few months, else you don't want to be there? And also, by nature, are you pessimistic? Some people are. I'm not saying that whether that is changeable or not, but by nature some people are just pessimistic. I mean, even if they try, they can't see any optimism in any activity or anything that they see. And a lot of people, I find, at least on Twitter, are in that category, where they are not able to have an optimistic view of the future, and they just want to sort of find or pull hair out of every single activity or event. And I think this kind of mindset is very detrimental to investing, because investing requires hope that what you bought will go up, and that what has been happening all in the past will keep on happening, and that human nature in general will not be changing in a very short period of time. So the whole idea of remaining optimistic despite having some drawdowns, despite having some hardships in your investing, is very, very important. And over time people will learn this lesson. I have also learned it over a long period of time, to remain extremely confident and optimistic about the strategy that I am running. Although there is no line in stone that the strategy has to run tomorrow the way it did yesterday, but the whole concept of human nature transforming into their actions in the market has never changed in the last couple of 100 years. So there is no big reason to believe that it is going to change in the next 5 years, for instance. So if you are not optimistic, allow some fund manager, some mutual fund manager, some PMS guy, somebody to take care of your money, even if you are not so optimistic about investing yourself. But if some people are not able to give part with their money to be handled by somebody else at all, then please develop some optimism and manage it yourself. Follow some research, follow Weekend Investing if you like, and do it yourself with full control in your hand. Your stocks are with you, your money is with you, you know when to press the button, you know when to enter, you know when to exit. It's all discretion left to you, so you can run that. And what is the pessimism about this 10-month fall that we've had? I mean, the kind of run that we've had, from 7,500 Nifty to 18,000, It is a run that was unseen, at least in my career in 27 years. Not seen a run like that ever. And probably it may not occur again, possibly. After that kind of a run, to assume that the next year, 18 months, 24 months, 36 months are going to be consolidation, or at least not as bullish, is quite normal. You had 2 years of enormous run. After every run, every runner needs to rest. That's what the market is doing right now. It is resting. It is allowing the earnings to go up while it is resting, so that valuations can be more in sync. And in the past, we've studied like last 2 decades of bear runs. 6 to 18 months is the sort of time period that each of these consolidation takes place, more or less. There are slightly longer ones as well, which are more flat in nature, but the downward trend does not last beyond year and a half in most cases. So we've had 10 months. We may have another 6 months to go. I don't know. We may have bottomed here. I don't know. So there's nothing to be, depressed about this. Market will go up. We are in a growth economy. We are so fortunate that we are investing in India, which is a growth country. Stocks are growing. Companies are growing. We have stable government. We don't have negative real rates. We are so much far better than a lot of other places right now. So please be optimistic. Please make use of the opportunities market is going to give you. Market will not remain at an all-time high forever. It will come to an all-time high. It will stay there for some time, like it did here. Then it will take its time off for some time, and then it will come again. If you see the long-term chart, this is what last 30 years has done. So you had a humongous bull run here, the Harshad Mehta bull run. You had a correction. It again retested the highs, and then it went sideways. Then it went up a little bit again. Then it corrected. Then we had a 5-year bull run. Then it corrected. Then it again retested the highs, went sideways, again made a new high, corrected again, made a new high, COVID crash, again new high. And we have not even fallen. I mean, if you see the context of the past falls, we've not fallen. So, why to assume that this trend will not go on for the next 20 years? I mean, I see no reason to assume that. So please, believe in what you are investing in, believe in the India story, don't be pessimistic, and enjoy the opportunity, or use the opportunity that the market is giving you from time to time. That is all. I mean, of course, very few people can time the market, and we are also not trying to time the market as such, but at least use the opportunity when they come. If you are in a SIP mode, I am also doing a SIP on one portfolio, and I'm sipping regardless of market going up or down, because I know I'm going to sip for the next 5-10 years, and I'm assuming that the market will remain in this green trend. So in next 10 years, if the average growth is 12% here and strategy can beat that and make it 15 or 16 or something like that, I mean, 10 years of compounding at 15% and you're bringing your capital in is phenomenal compounding. So don't worry about it. I think even though markets may go down by third quarter or fourth quarter of this year, I think we'll still come out of it within a short time. So thanks so much for watching this. Do share this with your friends and family, and I am going to take a break from Daily Bytes for a few days, but we'll be back very shortly, and do subscribe to our strategies, which are doing very, very well. For instance, MI and NF10 is doing extremely well. MI25 is doing very well. Then EverGreen has not done badly. MI20, MI35 are also remarkable strategies. Do go to weekendinvesting.smallcase.com and subscribe to them, and do share this video with others. Thank you, and I'll see you in a couple of weeks, but very soon. Thanks. Bye.